Okay, hi there, Lee, and welcome other traders. Now, I don't know if you've seen Lee's post. It was in the T for T Trader Development Program channel, but this is a great learning question that all traders should be benefiting from, right? Lee's got a great point here. He's gone into a short euro trade on the bounce, okay, following the, if you look at the big fundamentals, following the FOMC, okay, the Fed have come out and said they're going to do 6 additional hikes this year. A whole range of things, very aggressive. Lagarde reaffirms ECB stance. They had wiggle room before increasing rates, and the Bank of England raised rates without, and then sort of signaled that's it for the moment, right? So you'd think a really big, strong dollar push. Now, let's just come into the technical setup here first. You might want to read that question there first. So Lee was just saying back, it was looking to get into euro medium-term resistance line, which coincided with 111 the figure. And also it had moved like 110 points beforehand. Now, let me just go through the technical aspect. There's one key fundamental issue with the whole situation, which is the root cause of why this didn't stop. I'll come into that as well. But just looking technically, right? So I've got the euro hourly and daily charts here. Get a really good perspective. Now, to me, the level, like the medium-term level, right, 111 the figure, right, it did sort of get up here, last week. It's sort of sitting around here. The key aspect, and this is what you've got, you can't get sort of too polarized on the opportunity. Really, I mean, this has got 1, sort of 2, 3, coming up to the 4th touch. The problem is when euro sort of just started falling away, especially when the Russia-Ukraine issue kicked off and everything else. See how it hasn't been back to the trend line. I mean, Lee's right. Like the only level we've really got is this sort of previous high, which was just above 111 the figure. But at this level here, to me, it is still a good level, right? You've got 1, 2, 3 coming up to the 4th touch. Everyone's going to be looking at it. But the fact is, if anything, there's a little bit of unfinished business here. People would have been looking at these previous highs around 111 the figure, right? And thinking, well, there's going to be some stops above here. Of course there is. And if you look at the technical, the way this thing behaved at that level, it's absolutely clear as day that it basically what happened is it sort of brushed off the Fed sort of components at the short term, right? It has enough momentum because of the overall geopolitical picture around Russia, Ukraine and oil and all these other things. There's less liquidity in the market at the time of the releases. If there's any major geopolitical events, there will always be less liquidity. Now, what that does is it doesn't change the picture of what euro is doing, but it can change the behavior of the price action when it comes up to these trend lines. So you can see here, it's actually come up and tested and sort of entered that, what I would call the barroom brawl section, but there's not enough liquidity, a little bit of uncertainty, and it's enough to push it through the level and take the stops out, right? And I think this is primarily just on, and it's easy, don't forget, it's easy to sort of come up with these solutions after the event. And I'm very conscious of that. These levels here where it did come up to 111, so you got resistance up here. There's probably just some stops above 111 that were enough to just kick it into the barroom brawl. Once it got there, it's just sitting on a knife's edge. It's just like the market's super short, right? The whole euro market is short for good reason. And exactly as Lee spelled out, there's the Fed are going to raise rates more. ECB is sitting on the fence. There's the whole Ukraine-Russian issue. You got the problem with Germany and all the refugees coming from Ukraine and everywhere else. There's a whole bunch of bad things happening in Europe, but there's a bit of uncertainty. There's stop losses here, and it gets up here, and it's enough just to trigger the stop loss run. In this situation, right, you can use the range, which Lee has done here, looking at the range coming into up to this level, right? Yeah, it is 110, but that still gives you 40 points through the level, right? The real aspect of what you should be thinking of is, okay, there's 40 points on the top side. Lee's got him very close here to the top, right? And if I just get the cursor here, where are we? Where's the crosshairs? Actually, I should just put it on here. 111.06. It gets up to, where is that? 111.38. Okay, 06, 38. What does that tell you? It's 110 to the point, right? 150 is usually the range on any given day. It's gone straight to that level, right? So you still had 40 points. So going into the trade close to the level, smart, getting in close, but you still had potentially, 40 points of risk to manage around that opportunity, right? That's the key to it, right? So the geopolitical event pulls a bit of liquidity out, especially around central bank releases with geopolitics going on. It's just enough momentum. If anything, Lee, you're a little bit unlucky that it did have enough push to get through. Had the move from here to here, say, been 125 or 130 points, well, then you can quantify and go, well, you know what, if this even goes through, it's probably only got 20 points left. But the fact is it had 40, and that's enough with the uncertainty, kicks it through, comes back down. So it's very hard to gauge in this situation. Let me just come back to the chart itself. When, as you can see the resistance line, right? The three other touches are up top here, and then you've just got another high here. It hasn't really been in QE here. When it gets back in this sort of chart setup where it hasn't touched the trend line for some time, and it comes back to this, it becomes a little bit less certain, not less strong, but just especially with the geopolitical framework, that a liquidity will come out and traders will be thinking there could be a stop loss run here, right? It has that potential. And the fact is it had 40 points really left of range to move. In this situation here, it's very hard to gauge when you've got this sort of, hasn't been back to the trend line in a while. It's very hard to gauge where momentum will stall, right? So in that aspect, with the geopolitical situation, I would probably 9.5 times out of 10 always go with the false break trade, let it trigger higher, come back down into the range, and then, because it's been, the momentum has been completely diffused. Lee was right there as well. It was massively overbought. All the things, it had everything going for it except the geopolitical situation, a little bit less liquidity following the Fed and the Bank of England, and the geopolitical issue, enough to just trigger that stop loss run and back down. Right, so a little bit unlucky, but there are one or two things, and you spelled that out, Lee. There, it's the range would be at 110. I tell you what, that's not enough. If it was 140, 150, you could be very confident that that would stall, even if it just popped through. The fact is, you had that 40 extra ticks. That was enough to give the market a bit of hope to trigger those stops. And now, to me, everything else around what you were saying there, Lee, is correct. Like, you know what, the Fed, right? They're talking about 6 additional hikes. This is looking good. To me, it's like after we had a number of months ago, I think it was the US CPI numbers come out massively high and the dollar fell, right? The market was expecting that. So the market would have been expecting some of these, must have been expecting a very aggressive Fed statement. That's come and gone. But what we can see, like I was just saying about the CPI in the US some months ago, it's a repositioning of the market. The market was very short euro, clearly. It's come straight back up to the key level, triggered the stop losses above the resistance line. And if anything, it's refreshed the whole opportunity. I mean, I'm more inclined to get into the trade now, even though it's stabilized, but it's back below the trend line and we should see it drift off. Fundamentally, that's exactly what should happen. But leading into it, trading it aggressively, trying to pick that top is problematic around geopolitical events, around the central bank announcements, and then obviously the range. The key part to that whole aspect was the range aspect. 110, yeah, I tell you what, we just needed a bit more in that. So down the bottom there, did I miss anything? Well, you didn't miss anything. You had everything in there, but you just probably didn't respect the range and how far it could go and the possibility. Like it's you know what, you'd be thinking everything lines up here perfectly. The only thing that isn't in the picture is the range, and it could pop above, right? So that's a bit of a cruel one because you can see you've got into like it's lower than where you entered the market now, which is pretty brutal. Okay, so I understand that this is a real sort of not real kick in the teeth, but one of those ones. It's the intricate fine details around the opportunity. And if you look on a bigger time frame, like the dailies here, you can see euros is coming back to test prior levels. And if I was looking at this as well, I would come back and go, well, hang on, there's another previous bottom here that we should be looking at. This one here. Okay, 111.19, 20, right? It's once again, it's gone up to 38. You use that. That's the only. So when you don't have trend lines, like clear, big, long trend lines, like we've got up here and down here, you do come back and focus in on previous highs or lows. In this situation, this low here, 111 sort of 19, 20. Okay, you use that, and your stop loss is probably above 40, and you survive. But still, you want to make sure you've got the range correct. And if you look at its stochastics here in the long term, it's not overbought just yet. So that's probably the key partly is just understanding, I like to have those yellow actually, that like you've got all the components. It's the loose liquidity section as it came back to that trend line, trying to pick tops on moves after big events. And with geopolitics going on, it's hard because with that lack of huge momentum stopping it at the trend line, it can get a little bit gray, and that's where you get that little flick up and it takes out the stops, and it is where it is. To me, Euro looks more refreshed now for a move lower than it has done before, okay, and at much better levels. I hope that answers your questions. Any feedback there, Lee, or anyone else, let's let me know. This is a great question, and I think everyone can learn something from it. All right, guys, have a good one. Cheerio.